Our next speaker, I love this title. Fundraising is bull until it's not. What founders really need to know. Some of you might know John Emmons from Project Wilbur. Everybody give John a round of applause. He's going to really lead into our panel discussion, which is about small business capital. So John, thank you so much for coming and speaking to us.
Hey everybody, how's everybody doing? Oh yeah, we got like 3 people that are awake. Awesome, that's awesome. Quick background on me. I've been doing startups for about 20 years. Before that I was a teacher. I'm going to go over this way because it's squeaking. Basically, went from education to startups. I've done 10 of them. I've exited 5 of them. On the executive team for all of them, co-founded 2 of them. Almost all of them were in e-commerce. Never did anything in healthcare. Don't ask me about healthcare. I don't know the answer. But that's pretty much the breakdown. About 10 years ago, I moved to Vegas from the Bay Area. Thought I would be here for 2 years. I'm still here. Love this place. It's awesome. And I try to give up as much time as I can for programs like this. What I'm going to talk about tonight is basically, I've helped a bunch of companies raise money. I'm usually the advisor. I'm usually the guy that walks through that whole process so you guys know what to do. I'm now that guy. So I'm doing it for myself for a company that I was brought into from a family office, and I kind of wanted to walk through what that looks like in the real world when you're going to venture capital, you're going to family offices, and you're going to angel investors. So that's me. I talked about me already. All right, so Project Wilbur, it's a company I started 5 years ago. Ask me about the name later. That should be a question. Someone should take it. There'll be a test. So basically we do fundraising services. I've got 30 developers in Latin America. We do due diligence for family offices. So we know what to look for. We know what succeeds, what fails. Basically the questions you need to be asking yourself before you actually say, hey, should I go out and raise money? So Tix4, anybody here at Tix4 before? Tix4 tonight, go get tickets, anybody? Wow, well there you go, that's why we're raising money. One guy. So basically, this brand's been around since 2002. There's several booths on the strip. Family office acquired it, and they brought me in to head up on the executive team. So I'm the chief strategy officer there. So every startup needs capital, right? So we needed capital. We want to scale. We want to go faster than we were. So you got to figure out what stage you're at, right? Are you an idea? Are you a drawing on a napkin? Do you have revenue? Did you build a thing? Are you pre-seed? That's, you think you're at product market fit. You're like trying to figure it out. You got an MVP out. Seed is, I'm really close to product market fit, right? It's echoey.
Stand on the stage.
Staying on the stage. All right, there we go. Is that better? Still doing it?
One more foot.
One more foot this way. Back. All right. See, I can take direction. I'm coachable. You should invest in me. All right. So basically, depending on which stage you're at, and everything after Series A means you're doing 1 million ARR or better, right? So you want to make sure that you are where you fall into this. And each one of these, you're giving up like 20% of your company, right? So it's not 20% each time. There's dilution that happens. So just, you're not giving up 80% to get to Series A. All right. So you need things that catch the eye, right? We did 11.2 million last year. That matters. That's a lot of money. That's gross revenue, but it's still a lot of money. So how do we figure out how to get the eye of the investor? So you want to make sure that you're in the right place. This is Series A, right? We are kind of past Series A, right? But at the same time, we're not, because there's a lot of things that we have to fix. And a lot of things we have to tweak, and a lot of tests we haven't run. So you have to figure out where you fall in. We know we're Series A. Other people might be Series B with that level of revenue. So you got to go to your funding sources. So I've been doing this a long time, so I have lists of, 2,600 VCs, I think, 17,000 angels, all accredited. So I kind of know like what buckets they fall into. I think the previous speaker was speaking about knowing your customer. This is the same thing, knowing your investor. It's very important. You have to know, I'm gonna go over, it's like echoing in my ear. So you have to kind of know where you're going, right? And then you also have to figure out what sort of finance you want. And what they're going to be happy with. So you also have to break it down so it's simple. We have 3 channels of business, so they understand it, right? You need to be able to send it to a customer or investor and be able to have them ascertain what you're doing without a whole lot of confusion, right? So we focused on venture capital because we're going to raise a lot, and we're going to raise several times because we want to grow really fast. So we focused on who are the right ones within the network, and who are the ones that care about Nevada, and who are the ones that go forward with helping a company scale past round 1, round 2, round 3, or A, B, C, etc. So we went through breaking down exactly how we make money in the simplest way forward. I'm going to go with forward. Forward's good. So we started going through, breaking this out, creating financial models around that, and then showcasing that to the different family offices and venture capital that were around in Vegas and Reno. Because it makes sense. They get Vegas, they get shows. It makes sense selling tickets. So we wanted to showcase the different traction numbers. So we started with a couple of different versions of this. This is what we landed on. This worked because we start down here with the 11 million, which should be up here, but it's not, because we're going in 3 years to hit this, right? It's always about having your projections so they know what you're going to do with the money that you're raising. So we're also evaluating a bunch of debt financing, because when you have revenue like that, you can pull debt financing. There's a bunch of different programs out there. The state, even GoEd, has programs for debt financing. So highly recommend everybody research those things. So what are you going to do with the money when you get it, right? So every startup needs to have an answer to this. This is a unit economic breakdown of what we're going to do with the money, right? We're going to take the money, we're going to spend the money, we're then going to have a growth that is going to show a net profit, right? So this is the return on ad spend. And then if we take, this is from tests that we did. This is down here what we expect to do with the money, right? This is almost $1 million a month growth. That's insane, right? Just 100K ad spend, very cool. So what do investors really want to know? They want to know these things. They want to know, has the team exited before? Do they know what they're doing? Do you have competent teams? Do you have a 3-year plan? I kind of covered some of that just now. Do you know your market size? Is it $1 million? Is it $100 million? Is it 1 billion? VCs don't care about 1 billion. That's a niche, right? So you know what you're talking about, and know your TAM, SAM, SOM, total addressable, total addressable market, SAM, serviceable addressable market, and then SOM, serviceable operatable market. Serviceable operatable market should be what you can either capture in 4 years or what your immediate playground will be. It's very cool. So let's go through that. So team, this team has, I think we have 9 exits combined. So we've provided a return to investors at least 9 times. Some of them were in the billions. We have expertise. These 2 gentlemen, these 3, not me, I'm not important on that one. These 3 have been doing, they MJ Live, they did Britney Spears, they did a bunch of different shows. Provided returns. Do you have a board? Does the board add value, right? Who is that board? What have they done? So all of that's very important to make sure you're capturing that and you're communicating that to the potential investor. You want to be able to break down what you're going to do with that money, how the revenue is going to go up, what the returns will be, how you're going to reinvest. Are you going to run negative? It's okay to run negative because you're growing, right? Keep that in mind. Make sure you're communicating. If you're going to go venture, you want to communicate a loss for at least the first 2 years that you're raising. 3rd year, you could be profitable. First 2 years, no. Because they'll be like, well, you're not going to reinvest in the company? What are you doing? You're not public. You're not going to pay dividends, are you? So, and then when the market, you want to break it down. You want to go, this is a little more complicated, but you want to go TAM, and this is like still part of the TAM, right? So this is US, this is world, right? This is Vegas, because this is where we start. So this matters. It's the beginning. So I'm not putting this on because, we've already got term sheets and I'm not publicly raising, but you want to make sure you clearly articulate to every investor what they're going to get. Because anybody invest in here in startups before? Okay. So I've done 15 of them personally, and I've put together, 70 SPVs. I'm going to trip over my own wire here. All right. So what's important on here Anybody in here in a startup? Okay. You want to clearly know what you're going to raise. Don't say 1 to 4 million, right? Don't say like a range. Put milestones in. Figure out what you're going to execute on. You want to make sure the security is what they're going to get, right? Are they going to get 20% of the company, or are they going to get whatever it is, right? Stock, preferred A, etc. You want to break down your valuation. Why do you justify yourself being valued at X, right? Your minimum investment, they always ask for this. It's like the most important question that will always be asked to you, right? Oh, what's the minimum? 300K, that's the minimum, right? You want to go through and make sure that you have the timing, when do you think the exits will be, and you want to answer that with data from the space. So, all right. So there's a bunch of valuation considerations. This is actually one of the hardest things to figure out. So when you're going through the valuation, you want to look at all the comps, just like in real estate, right? You want to look at what comparable companies have exited in the space that are playing in the same playground that you are, right? Does that make sense to everybody? I see a bunch of nodding, but like, yeah. Yeah? All right, cool. All right, so for us, these are all exits. The one that's not on here is Ticketmaster, because they went public before. I only went 5 years back. What's important with all of this is it shows basically what the exit space is. Each one of these is between 5 and 15x on their exit. That's how I justified the valuation when I went through and started raising. I'm like, everybody else is 5 to 15x. So that's gross revenue. So I'm able to say, this is what we're worth. By pointing to, like this guy, StubHub, 1.8 billion, their S1 filing has them at 16.5, right? Sorry, I'm gonna go over here. I sneak back over here, all right. So anyway, so you need to have this data so you don't have to answer the question. You actually should have a pitch deck when you go and send it out that's like 15 slides, right? And then you have an appendix with all this stuff in it. So you can answer any question during the presentation that makes sense, and you solve those problems. Now, I kind of went through like how I organize stuff. This is obviously not the whole presentation because I'm not pitching you. I just wanted you to see what I've kind of gone through. Now, investor relations, this is the hardest thing. You need to make sure you're doing monthly updates. You need to make sure if you have a board, you're doing quarterly updates with financials. And then you also want to make sure that you're navigating all these challenging conversations. How many of you guys think it's a really good, just show of hands, it's a good idea to not tell the investor bad news? All right, cool, good stuff. Why is it a good idea to tell them? Anybody? Transparency is super important. That's awesome. What else? They can help you. They got money by solving problems. Right? Most of them. I shouldn't say all of them. I've met some trust fund people. But most of them got money by solving problems. You get money by solving problems, they can solve your problems. So I'm just going to... I'm just going to do the arm thing. So when you have investors, you want to use them. They're a resource, right? They also know other investors. Most of them... Can you guys hear me like this? Yeah. All right. Do I need this? Are we recording from this? All right. I'm going to do this. I'm going to give this back to you. Here you go. All right. All right. Thank you so much. So basically, you want to utilize all of your investor, your network, your advisors, all of these different people. They're really important. They'll bring people to you. Right? Utilize your connections. If you have passion and you believe in what it is, they'll believe it too. So here's what I did. So it took about 45 days to get everything situated so I could fundraise. That's building a data room, pitch deck, doing recordings, talking to friends, making sure they understand the pitch. I think it was said earlier, Karma, I don't know where she is. Raise your hand. There you are. You were talking about talk to 100 people, right? I think that's great. I didn't talk to 100. But I did talk to 25 people that do fundraising, that have done founders that have done raised 10s, 20s, 30s million dollars for their own companies. So I wanted to make sure that my message was concise, simple. I'm a big fan of one sentence problem, one sentence solution, one sentence why, right? Because the longer it is, the harder it is to understand. The harder it is to understand, Nobody makes a decision. It's called consumer confusion, same thing with investors. So you want to make sure that all that makes sense. Now, I had 600, all right, so all my investors that I have in my network, I have 600 that fit the profile to invest in this, right? I emailed all of them, I called a few of them, got 84 meetings, right? I got 3 term sheets, I'm still in DD with a few of them, but I passed DD with several of them. I'm not going to announce them yet, because they're going to do a press release. But this all took roughly 80, it says 85, but it's like 90 days, right? This is not a fast process, right? Checks are starting to come in now. So my point to you is that unless you have a bunch of IPOs and you've taken a bunch of investors down the road, they're only going to invest about 10% whatever you gave, like return you gave them. So you want to make sure that you keep expanding the investor pool. Because has anybody heard of investor fatigue? Okay, I got a couple of nodding heads. Just real quick, investor fatigue is where an investor feels that they are shouldering the responsibility of funding a company on their own or a group. And you don't want that. You want to mitigate the risk. You'll hear mitigate a lot in venture stuff, which is the most important part. So there you go. You want to make sure you keep updating. Good, bad, ugly. I just talked about all that. So anyway, so it's updating sales, deals, closed, etc. So any questions? Thanks. Yeah. Thank you.
What's the minimum team size that you would need to be entering into like an investor relationship?
So that's a really good question. So you're talking founding team or?
Yeah, founding team.
Okay. I personally don't like, I mean, I like solo founders. There's some of them that are great. I like 2. Minimum is 2. Reason why is I don't want to hold the founder accountable, right? Would you want to hold just one person accountable? Like you have to trust them that much, right? Like that's a lot of trust. So I always make sure there's someone else holding them accountable. I also make sure founders vest. So they just don't immediately have their stock. They got to vest.
Does it matter if you have used an ODC?
I use what?
If you use an ODC, offshore development?
No, I mean, I have one. I have like 4 startups that we're building software for now. So I don't have any issue with that. The ODC matters, right? There's so many out there that are not trustworthy. So you just want to make sure you're doing the right thing with the right group. So vet them. Ask them questions. When you ask them for a proposal, right? That proposal, like a scope of work, right? They should have an MSA, Master Services Agreement. They should have a scope of work that's between 20 and 45 pages, where they've really thought through the problem, right? I mean, our scopes of work I don't think we have any that are less than 30 pages. So, anyway, good question. Yeah.
Where do you get the real data of your competitors and for the projections and stuff you do, or if it's an industry that they're not publicly traded and you can't go in and read their?
So Crunchbase is a great resource. You can see how much somebody's raised through Crunchbase. I think it's $500 a year for the paid version, where they'll give you more detail. If you have unlimited pocketbook, you can go to PitchBook, but I highly don't recommend it. I think it's like $20K a seat, so that would be a no-go. LinkedIn, they'll post sometimes how much they raise, so you just look at the founders. You can call them. Founders that are in this space and maybe they jump to a new company, call them. Say, hey, I'm thinking about building this. And all of us entrepreneurs want to help each other. I'm literally here right now with no other purpose than just to help you guys. I'm not selling anything. I'm just here because I think it's important. Yeah?
Do most of the SaaS companies, that by the time they're talking to investors, do they already have an MVP built, or do they talk to them pre-built?
Depends, right? If you're pre-seed, you have an idea, you want to build a thing, they don't, right? But they also don't need a lot, right? Most MVPs are like 50K, 75K max. If you're raising like 10, 15K to kind of get the Figma figured out and all of that, and you didn't use your credit card to max that out to figure it out, most investors are going to have a hard time giving you a check. So just be thoughtful. You got to invest some of your own money, your own time. Anybody else? Yeah.
In terms of a board, do you need to have a board established before you talk to an investor, or will the investor help set something like that up?
Depends on the investor. VC, yes. Angel investor, no. I mean, maybe. It really depends, right? Do you need a board? Depends how much you're raising, what sort of oversight you need. Are you going to be fiscally responsible? Have you provided a return before? Do you know what you're doing? All of these things lead to, do you need a board? Your first board should be 3 people. one person from the employee, one investor, and one independent, or like someone that identifies with the customers, and then you expand out from there. Yeah. Yeah.
I read recently that there was a startup fund that said using AI, they were going to launch 1,000 startups. I'd love to get your perspective on that.
AI is amazing. It's doing a lot of really cool things. There's a lot of funds that have a similar premise. I don't know. There's a company called Inflection. Reid Hoffman started with some of the executive team that's now at OpenAI, and their whole mission was that. And they raised like $1.8 billion, I believe. And now, if I remember correctly, they lost most of the staff to OpenAI. And now they are focused on, basically they're a PE firm. They're buying a bunch of AI companies that are showing some revenue, that have a potential to fit a niche that, you know, makes sense to them.
But you mentioned that you were helping companies, build a product. And so from your perspective, do you feel that that would accelerate your directive to do that?
Yeah, sometimes. I mean, look, there's a bunch of different AI platforms. My developers, I have 4 AI developers. Thank you. And they're great. But there's so much changing so fast. And generative AI is getting closer to just average and standard intelligence, which is not too far from super intelligence. And then what happens then? Do we all quit working? Like, I mean, it's going to be blue-collar billionaires everywhere. So, yeah. Anybody else? I know we're close to end, right? We're good? All right. Anybody else have questions? Yeah.
What is Project Wilbur? And I'm having trouble getting the handshake.
Oh, yeah, that was actually supposed to go away. Just,
okay.
You could email us. I'm Emmons, EMMONS, at Project Wilbur. Okay. Feel free to email me. I am hella busy right now, like, just to be clear. So if I don't respond right away, that's fine. And then hello at Project Wilbur is really easy to get a hold of us. Project Wilbur is a great story. So one of the startups I was at was Cafe Press. Cafe Press went public. I was head of biz dev. And I had just brokered the deal with Costco. And the CEO chose to go a different path. But I had already resigned because we had just gone public. And I wanted to be able to exercise my shares as one does, because you can't be an insider and exercise all your shares. And I really wanted to sell my shares. So I get a phone call from my contact at Costco, who's a C-level guy. And he's like, hey, we're going to pause. And I'm like, what? It's supposed to be a fairly large 7-figure check to me every year. So I was sad. He's like, I'll call you in 5 years. I'm like, okay, sure you will. So I have my daughter, and I'm reading her Charlotte's Web, and I get a message from this guy 5 years later. And he's like, all right, you want to go do this? And I'm like, sweet. So I started the company Project Wilbur because we make pigs fly. And then I started working with a bunch of I didn't end up getting Costco. Costco went with Harlan Clark, which is fine. It's the devil you know versus the devil you don't know. But then we started working with startups, and now we have a unicorn horn on there. So, yeah. So that's kind of the gist. But it's a great story. Yeah. Anybody else? Yo.
So me and my partner were talking about how what vesting schedule made sense, and he wanted to do 25% after the first year, so 50-50 ownership, and then 25% for 4 years with a first year cliff. I really wanted 10% up front because I'm investing a lot of like data science models to the project, and he would take those in the event that I left the venture. Mm-hmm. Would that be a red flag for investors?
Have you started vesting at 10% a month?
No, I'm saying I would want an initial 10%, and then like the rest over a 4-year schedule would be fine.
Are you a founder?
Yes.
Okay, so if you're a founder, you could start vesting day one.
Okay.
But you vest over a period of time. Mm-hmm. If you're not a founder, there's a 1-year cliff. If you're an employee, you're a 1-year cliff. Okay. Right? Look up the Amazon vesting schedule. That's important because they do like 10%, and then 20%, and then 35 or something, and the remainder in the 4th year. Most startups do 4-year vest. Some do 2-year vest. That's usually first-time startup founders. If you're a founder, monthly vest is fine, but do it over 4 years. And if you're hiring people, it's a 1-year cliff. You should know whether you want to fire them or not within 1 year. Or like you really need to go to a different class about people. But yeah, that's kind of the gist. Anybody else? Yeah.
So you've probably seen the average seed round size move around a lot.
Hmm?
Right now it's like 2 to 5 million.
It depends on where you are,
Okay.
right? I mean, if you're in the Bay, 2 to 5 million for a seed round, sure. If you're here, no. It's like 500K to like 1.5. If you're in Miami, it's like up to max 2. New York could be as high as, the Bay. So it's all relative to where you are, because the cost of living is different in every place, right? And the whole thing about raising money and why VCs and angels give you money is focus. There's a great interview between Bill Gates, Warren Buffett, and I think it's Wall Street Journal. And they said, what's the difference between you guys and the average Joe? Why did you succeed and they didn't? Focus. Money is to buy your focus. They believe in you, they're giving you money. You're to focus on the thing they gave you money for, not do 5 different things. In fact, I hired someone to help run Wilbur, so I can focus, because that's important. Anybody else? Yeah.
How do you assure your investors the integrity of your offshore development team, so that they're not developing an entire product and then reselling it in China or Philippines or wherever, or selling it to another American company? That's researching your company, but is there
It's so hard.
Is there any legal protection for that whatsoever when you get to a certain level with offshore?
No.
Okay, because I sweat that.
Yeah. Like, I mean, if you start working with an Indian or Chinese development company, there's no loyalty,
Yeah.
right?
Which VCs have to ask this, I would think. So it's like, how do you cover that?
So I don't. I use my guy. My guy is a partner in Wilbur, right?
Oh, okay.
So Abraham is a partner in Wilbur. I'm a partner in his company. His whole thing, or the value that he brings, is that I've worked with him for 7 years through 4 different startups, right? We have a history. Like, he's like the godparent to one of my kids. I'm the godparent to one of his kids. If I didn't have that, I wouldn't use him, right? So that.
Yeah.
And I fly him up if I'm ever using him and I want to have him as the CTO for something. I fly him up to meet the investors, because that's important. Face-to-face is even though COVID happened and we all went digital, face-to-face still matters. Anybody else? Because I'm talking a lot.
One more. Oh, it works now. Great.
Hey, look at that.
Hey.
Yeah.
To his point there, if you deal with an ODC, when I've dealt with it before, it's good to do it piecemeal if you've got concerns like that.
It is. It's better to have everything in GitHub so you have full control over everything. Like every week every day they should be uploaded in.
Yeah.
Yeah.
But if you can keep it separated out, I found it was easier to control the actual source code. And if they don't know, they know the parts, but they don't know how all of it interconnects, so to speak. It's easier for me to keep that in line. So on our end, we can link it all together and get it working, not just give them tasks. You need to get this piece, and you get this piece, and you get this piece, and this piece.
But to do what you just said, you need a technical expert that can manage that project, right?
That was me in the past. I wasn't sure if he had that or not.
Sweet. Yeah, if you have that, you're good, right? If you don't have a technical expert, then you have to have a partner you trust, right? The biggest thing with offshore development or nearshore development is you tell them you want to build a house, but you forget to tell them you want doorknobs on every door, right? And you think they should know that, and they don't know that, right? So that's the thing to be thoughtful about. Everything you think would be common sense is not, right? So you have to be super granular. Like, hey, I need this button to click and do this thing right here. And they're like, well, why? Well, because that's how they all work. Why don't you know that? Because they're not here. Yeah.
I want to redirect the question I gave you earlier because of the offshore development issues that you just brought up.
Yeah.
What would it take for you to give up your offshore development to have a team that has common sense with accelerated development using AI?
Okay. And this is my last one, right?
Yeah.
Yeah. All right. So here's the thing. No matter how much you automate something, you still need artisans. You need it done correctly, right? So you might be able to buy a prefab wall or Boxable or any of the other companies, think Extreme Cubes. They'll build you a house and they'll ship it to you. You still need somebody to connect the water and the sewage and all that stuff. You need a human no matter what. It's never going to be fully automated. So you still need to have some level of expertise outside of the AI. That's always going to be a thing. It's just a tool to make everything go faster and better, right? So as long as you treat it that way, you'll always have the right people. So instead of a team of 100 developers, maybe you need 10, but you still need the 10. That's the point.
But now you need the right team.
Right. So now you get better people, right? So anyway, thanks everybody.